Greetings from Geojit Financial. The latest IPO on the offering is from an unlisted sector, waste management. The IPO of Antony Waste Handling Cell Limited. It seeks to generate rupees 300 crores from this IPO, with rupees 85 crores coming from fresh issue of shares. The IPO is in its second incarnation after its first attempt was withdrawn due to lack of investor interest. That was a time when the investors and the stock market was trying to grasp the enormity of the COVID-19 pandemic. So should we invest in this IPO? Geojit was one of the few research firms who had assigned a subscribe rating to the IPO during its first incarnation, and we still maintain this subscribe rating, but only for investors with a long-term perspective. Let us look at a few positives about this company. The company has a very diversified business setup. It is a leading and an established player in the municipal solid waste management sector. It has diversified product offerings with municipal waste collection and transportation accounting for around 60% of its total revenue from operations in FY20. It is also a very diversified geographic presence with projects in Mumbai and surrounding areas of Mumbai and Delhi, Jaipur, Amritsar, Mangalore, etc. So it is not basically dependent on any particular geographic area. It also enters into different types of projects, various contracts, looks at the viability of these contracts before entering into it. And most of these projects are long-term in nature, which ensures good earnings visibility. Now, looking at the potential of this industry, it is a known fact that waste handling is going to be a huge problem in the future. Increasing urbanization, changing lifestyle trends, increasing disposable incomes have all increased consumerism and at the same time increased waste generation. We just need to look around us to understand the problem that this is going to pose in the future. Now, Antony Waste is very well positioned with regards to its track record, its execution capabilities, and also a strong asset base, which will help in taking advantage of this of the potential in this sector. It is also looking at the emerging segments in the sector like waste to energy projects, e-waste handling, etc. to move up the value chain in this sector. Now, looking at the financials, the company has always exhibited decent margins and healthy revenue CAGR growth in the last couple of years. In the last year, FY20, revenue grew by around 58% year on year because two projects became operational. Now it has 18 ongoing projects, and this is expected to increase the revenues in the future. But COVID-19 pandemic has had an impact on its operations because of lower commercial waste generation, but the management expects it to come back to pre-COVID levels on full resumption of economic activity in India. Now, looking at the key risks, we feel that one of the main risks faced by this company is the fact that its revenue is dependent on municipal corporations, and we all know that municipal corporations are notorious for their delayed payments and also ad hoc way of doing business. Its top 5 clients, the company's top 5 clients account for more than 75% of its revenue. So any disruption in terms of payments can have an impact on the working capital cycle of the company, and this is one of the key risks that investors need to take note of. Looking at the valuations, the company is available at a PE of 15 times on an FY21 EPS basis. So although there is no listed peers for an exact comparison, we feel that the company's valuation is attractive. As such, looking at the potential of the industry, looking at the company's execution capabilities and the earnings visibility, we assign a subscribe rating to this IPO. For more details, you may refer to the Geojit IPO note published by Geojit Research to get more of an idea about this IPO. Thank you and happy investing.